Hello viewers, welcome to my channel. This is Geetha. As I promised that we will be going with all the past year questions of company accounts. Okay, one by one. So today we are going to see past year question, January 26, question number 6 for 15 marks. This is redemption of preference shares. Before going into that, you should understand what is redemption means. Redemption means the process of paying an obligation. Obligation means compulsorily you have to make a payment. That should be in time. Okay. And what are the necessary conditions for redemption of preference shares given under Section 55 of the Companies Act? Because everywhere in the question they say that it is as per Section 55 of the Companies Act. So you should know that. Okay. No share can be redeemed except means shares can be redeemed only out of divisible profit. You should understand easily like that. The language is no share can be redeemed except out of divisible profit. It means the shares can be redeemed only out of divisible profits. What is a divisible profit? The profit which is available for making dividend. Okay. So that only you can use it for the purpose of redemption. Second, they say that no share can be redeemed unless they are fully paid. Suppose if it is partly paid or partly called up, you cannot redeem it unless you receive the entire amount on that shares. And then any premium, if you have to redeem the preference shares with the premium, suppose here it says that we have to redeem it at a premium of 5% or 10%, then that amount, the premium amount, will also be out of the profit. Okay. So now what we will do, we will be doing out of the profit, we will be transferring that into a reserve account called capital redemption reserve account. Okay. So first what you have to do, you should know that when you are going to redeem a preference share, it is only the face value of the preference share, how much it is, and it can be redeemed by using the capital redemption reserve or both capital redemption reserve and you are by issuing some right issue equity shares. So that the question will explain to you. Okay. Then in case if it is partly paid up and the question doesn't say anything about that, then it is assumed that the directors have called up the final due, then it was made fully paid, then it is redeemed. But if the question is given with some shares fully paid and some shares partly paid, and there is no other further detail about the final call or made or something, then you have to presume that only the fully paid up preference shares are redeemed. Okay. If the question says the final call was made, then it is well and good. You make the final call, receive the total amount, make the preference share into fully paid, and then redeem those preference shares. Okay. But in case some shareholders, after giving proper notice, some shareholders did not pay the final call money, then the directors may decide to forfeit that shares. And these shares are not going to be reissued because there is no time. Immediately they have to redeem the shares. So they will just forfeit the shares and the balance shares will be redeemed. Clear? So we will get into the video now. And before getting into the video, I would like to request all of you, please, if you have not yet subscribed, please do subscribe my channel so that the YouTube algorithm will be able to show this video to many more students. And you also do not forget to give the like button, thumbs up button, and then share this video as much as possible to all those who are aspiring for CA Foundation, or those who are in this type of interested in this type of videos. Okay, now let us get into this video. The balance sheet of Dynamic Limited issued at 31st March includes the following information. They have got some equity shares fully paid up and 1,09% preference shares of 100 each and 70 paid up. I said that it is not fully paid up. And the condition is only fully paid up shares are redeemed. We will see what the question says. And they got a capital redemption reserve, security reserve, and general reserve. Free reserve is also there. Balance with the bank. Under the terms of the issue, the preference shares are redeemable on 31st March 2025 at a premium of 5%. As I have already told you that whenever there is a premium, this premium amount also will be taken out of profit. So do not forget to make a journal by debiting the profit and loss account or general reserve account to premium. Okay. Then shareholders having 4,000 shares failed to make the payment of the final call. So under section 55 of the Companies Act, if they have failed, we cannot redeem those shares. And these shares are forfeited after giving proper notice. So first what we have to do, we have to call for the final call. You have to make the final call due and money will be received. But 4,000 shares, we will not be receiving the money. Then that will go to forfeited. You have to make a journal entry for forfeited share. Okay. Then balance 1 lakh preference shares, 4,000 shares were forfeited. So only 96,000 shares will be redeemed. So it's clear with you. Next, in order to finance the redemption. Now how they are going to redeem? The company makes a right issue. So 1 lakh of equity shares, 10 each at 11 per share. That is 1 rupee premium. 2 payable on application, 4 allotment, that is including your 3+1 premium, and the balance you have to be very careful on 1 June 25. So only up to allotment is received in the current year. Only that amount will be utilized for redeeming the preference shares, not the balance amount. They did not say that when that balance has been received. So it is made in 1 June 2025. So we are not going to have the link on this. Only we will be taking the application money and the allotment money. Clear? Only face value is taken. No premium will also not come into for the use of redemption. So make clear with that. And then the money due on allotment was received on 31st March. So allotment made, that was received before 31st March, on 31st March. The preference shares are redeemed after fulfilling the necessary condition. Okay, what they will do, they will subtract the face value of the right issue, equity shares, and the balance amount they will be taking from the capital redemption reserve. Clear? So just for making it easier, I have made all the writing work earlier. Okay. So first working note, you should make it face value of preference shares. We know that 4,000 shares are forfeited. So only 96,000 preference shares at the rate of 100 each we have to redeem. So total amount required is 96 lakh. This is face value. You have to take in face value only. And what is the face value of equity shares applied? We will see that. We will subtract that amount and the balance will be, general reserve will be converted into capital redemption reserve. Okay. So now first final call. So don't forget it because it is partly paid up. 70 is paid up. 30 is yet to receive. First the directors will call upon that, make the final call due and payment received. After that only the redemption will start. Okay. So now preference share final call account for 1 lakh shares, because they will send the call letter to each and every one. 30 lakh final call becomes due. But 4,000 people, 4,000 shares, money has not been received. Only for 96,000 shares, money is received. So 80,000 is received. Calls in arrear has become 1,20,000. Now the directors have decided to forfeit these shares, these 4,000. So 9% preference share capital will get debited because all the money was called up. So you have to debit the share capital with 100 rupees, 4 lakh rupee, and calls in arrear is 1,20,000. Whatever the forfeited amount received here is a gain. This will be transferred to capital reserve at the last. Okay. So bank account, now they are issuing a equity shares. They are issuing 10 lakh equity shares, 2 rupee on application. Okay. So 10 lakh equity shares, bank account debit, to equity share application account 20 lakh. This application money is transferred to equity share capital account. Then for allotment, they have given it for 4 rupees, which includes premium of 1 rupee. Okay. So now allotment due is made. Allotment due is 4 rupees 40 lakh, and security premium is 1 rupee, and the balance will go to the capital account. All of you know that only the face value goes to the capital account. Only these two face values, 20 lakh rupee gone to share capital account and 30 lakh gone to share capital account, will be taken for redemption of preference shares. See here, that's why I have subtracted the face value of equity shares issued is 50 lakh, because the balance amount we do not know, and the balance on 1 June 25. So we are not going to bother about that. So the balance required is 46 lakh to redeem the face value. So that for that we will be creating the capital redemption reserve out of general reserve. Clear? Now this equity share is issued. First we made the final call due, money is received, and 4,000 shares they did not pay. Those shares were forfeited, and the forfeited amount you have to transfer it at the end to capital reserve account. Okay, because we are not going to make payment for those 4,000 shares. Only 96,000 shares are going to be redeemed. And when you calculate that face value of 96,000 shares, it is 96 lakhs. And we have issued, the company has issued equity shares. 20 lakh is received for application, 30 received for allotment face value. So 50 lakh will be utilized for redemption purpose. So balance 46 lakhs we require it. That will be your capital redemption reserve, which will be created out of general reserve. Clear? Now you have to make the due for redemption. So 9% share capital account, 96 lakh. As the question says that we have to redeem it at a premium of 5%. So 5% is the premium on redemption. This will also be taken out of the profit. So here you are debiting the premium. Later you have to transfer it to your P&L account or general reserve account. There is no P&L, so we are going to transfer it from general reserve account. What you are going to do? General reserve you have to debit and credit this premium on redemption. This will get closed because it is a loss to the company. You have to debit the general reserve account. Okay, the amount due to preference shareholders will be along with the premium 100,80,000. Okay. Now preference shareholders will get debited and bank account credit. Money will be made payment. Now we have to transfer the premium to general reserve account. Okay. Next we have to share forfeiture will get transferred, as I said, to capital reserve account. And last we are going to general reserve, we are going to debit, give the work note number to capital redemption reserve account. Only this thing, whenever you read the questions, please keep it in mind. What are the things you have to be very careful? One is partly paid up. Okay. Second thing is that you have to redeem it with a 5% premium. Third thing is that these shares are forfeited. So you're going to redeem only balance shares. Okay. So the last thing is that you have to create capital redemption reserve for the balance amount of equity shares. And the fifth point, you should remember that only application money and allotment money face value can be taken for redemption. That's it. So when you read it itself, you keep the 4 or 5 points in your mind so that you will be able to do the sum in a faster way. Hope you understand this video, and if you like my video, once again I request all of you to give the like button and give your comments, please. Thank you for watching my videos.